Have you ever pondered over the future of the stock market? What does 2024 hold for investors and traders alike? It's a question that's been on everyone's minds, especially in the wake of a strong rally in 2023. As we stand on the precipice of a new year, we're faced with a myriad of predictions, each with its own implications for investment strategies. From potential recessions to steady growth, Wall Street forecasts for the stock market in 2024 are a mixed bag. Some firms like BCA Research predict a downturn, while others like Bank of America are optimistic due to the Federal Reserve's progress in tightening monetary policy. In such a volatile and uncertain landscape, understanding these predictions and their potential impact is crucial. But remember, as we delve into the different predictions from various Wall Street firms, these are merely forecasts, not certainties. Wall Street forecasts for 2024 are as diverse as the firms that make them. Diving straight into the thick of it, BCA Research paints a rather grim picture, foreseeing a potential recession. This could lead to the S&P 500 crashing between 3,300 and 3,700. Their reasoning? High equity valuations and high interest rates coupled with weakening consumer trends and geopolitical risks. On the other hand, JP Morgan also shares a cautious outlook, citing similar reasons. However, they do not predict a crash, rather a more turbulent journey for investors. Morgan Stanley, however, expects a flat market. They believe that the leadership will come from mega-cap tech stocks, a sector that has always been a bit of a wild card. But it's not all doom and gloom. Goldman Sachs forecasts slight gains in the S&P 500. They see potential in the market, albeit with a more conservative outlook. Bank of America, on the other hand, is a bull in the china shop. They're optimistic, attributing their bullish stance to the Federal Reserve's progress in tightening monetary policy. They see this as a positive move that will stabilize markets. RBC also sees potential gains, driven by one key factor: a decline in inflation. Inflation has always been a tricky beast, and RBC believes that its decline will open up opportunities for investors. Federated Hermes, too, believes that stocks will continue to grind higher. They're playing the long game, focusing on steady growth rather than sudden spikes. Meanwhile, Deutsche Bank is confident about solid gains, arguing that a recession is already priced in. They believe the market has already accounted for potential downturns and that the only way is up. Lastly, BMO echoes this sentiment, predicting solid gains due to falling inflation, interest rates, a strong job market, and rising corporate earnings. As you can see, predictions range from bearish to bullish, with some firms expecting solid gains and others foreseeing potential downturns. Now that we have explored the varied Wall Street forecasts, what are the key takeaways? In the complex tapestry of Wall Street's predictions for 2024, diversity is the thread that ties it all together. Some firms like BCA Research brace for a potential recession, while others like Deutsche Bank believe this is already factored into their forecasts. JP Morgan's caution is balanced by Bank of America's bullishness, driven by tightening monetary policy. The influences behind these forecasts are as varied as the predictions themselves. Equity valuations, interest rates, consumer trends, geopolitical risks, inflation, and job market strength all play a part in shaping these projections. For investors, the implications are clear. The market may see a flat performance, as Morgan Stanley suggests, or experience slight to solid gains, as predicted by Goldman Sachs, Bank of America, and others. Mega-cap tech stocks might take the lead, or the market may surprise us all. The overall sentiment? It's a mixed bag. Some see potential downturns, others foresee growth, and many anticipate a steady grind upwards. While the future of the stock market remains uncertain, one thing is clear: it's crucial to stay informed and make investment decisions that align with your risk tolerance and financial goals. So what does all this mean for you as an investor or trader? With the rundown of Wall Street's 2024 stock market predictions, it's clear that the stock market continues to be a dynamic and potentially profitable venture. Understanding these forecasts isn't just about knowing the numbers, it's about dissecting the why behind them. It's about comprehending the factors that influence these predictions, from economic trends to geopolitical risks, from monetary policies to consumer behaviors. These insights can guide your investment strategies, helping you make informed decisions that align with your financial goals. They can provide a compass in the often turbulent seas of trading, helping you chart your course amidst the ebb and flow of market tides. But remember, these predictions are not set in stone. The market is a living, breathing entity, constantly changing and evolving. So it's crucial to continue researching, to stay informed about market trends, to be adaptable and responsive. Remember, the future of the stock market may be unpredictable, but being well-informed and strategic can help you navigate the uncertain waters of investing.